Assalamu alaikum and Bismillah ar-Rahman ar-Rahim. Good morning, or I think good evening. Let's start. Today is the first class of SBR live revision. Let me share the page. Since it is the first class, so it will not be very long, but slowly and gradually, inshallah, we will increase the time period of the class. And number of the things which we'll be discussing, it will be slowly and gradually increase, inshallah. So SBR March 24 live revision classes, live revision class, and today is the lecture number 1. Lecture 1 is on IAS 16. Since the name suggesting that this is a revision class, so I'll be a bit quick to refresh all the concepts, important concepts relating to IAS 16, that is property, plant and equipment. Number one, when we say IAS 16 property, plant and equipment, it means property, plant and equipment means tangible non-current assets having useful life more than 1 year. Second, that property, plant and equipment will be used either in production or supply to others or rental to others. When we say rental to others, I always take a pause over here, and it is very important to explain that when we say rental to others, then what is the difference between IAS 16 and IAS 40? Basically, in IAS 16, when we provide property on rent, we do provide significant ancillary services also. The best example is hotel properties, because we just do not only provide hotel properties on rent, we also give significant services. So in IAS 16, when property is given on rent, when property is given on rent, it is given with significant ancillary services. Significant ancillary services. For example, we are talking about hotel property. But when it comes to IAS 40 investment property, in investment property, we do provide properties on rent, but we do not give significant ancillary services. Like you have just given a bungalow on rent, you have just given an apartment on rent. So we will not be giving the same services which we actually offer in hotel properties. So that is the biggest difference. Another thing is, if organization is given let's say there's an XYZ organization which has its own properties, but they provide those properties on rent only to their own employees. Those properties are not available to anyone else. They are only available to the employees, even though they are charging rent. But still, such properties will fall in under IAS 16 property, plant and equipment, because they're not available to everyone. They're not available to the general public. They're just available to the employees of the organization. So then such properties, they also fall in IAS 16 property, plant and equipment. Now, sometimes what happens, if your examiner says, for example, that market value of rent is assuming it is 60,000 per annum, but since company has a policy of providing properties on rent to their only employees, and they are charging rent, let's say rent from employees is 35,000 per annum. So instead of charging 40, you're charging 35. Now, sometimes some of the organization, they provide argument that we want to recognize the difference of 60 and 35 as a notional cost. So difference of 60 and 35,000, which is 25,000, is not permissible by IAS 16. You cannot recognize 25,000 as your opportunity cost or notional cost. Simply, you just need to recognize 35,000 as your income. And that 35,000 falls in IAS 16 because you are providing properties to your employees only. They're not available to the general public. So you cannot record the difference of 60 and 25. You cannot record that in financial accounting. Another thing, let's go back to the definition. IAS 16, property, plant, and equipment. The first point is tangible non-current asset having useful life more than 1 year. Second, it is either used in production, supply to others, rental to others, or even your administration offices. Your admin offices, they are property, plant, and equipment. And then another property is owner-occupied property is also a property, plant, and equipment. Owner-occupied property means where we are carrying out the normal operations of the business. So in case of owner-occupied property where you are carrying out normal business operation, that actually falls obviously in IAS 16. So owner-occupied property, applicable standard is IAS 16. Okay, now another point, when it comes to IAS 16, actually, we need to know a few terminologies. Number one is depreciation. Second is useful life. What is useful life? Depreciation. Residual value. First of all, let us quickly discuss depreciation. Actually, according to IAS 16, depreciation is the systematic allocation. It is the systematic allocation of depreciable cost. Now, we really want to know what you mean by systematic allocation. Depreciable cost means simply cost minus residual value. That is depreciable cost. So depreciable cost means cost minus residual value. Systematic allocation is very important you need to have a good understanding of systematic allocation. Actually, according to IAS 16, depreciation method should match with the pattern of economic benefits which are coming to the organization from the asset. For example, if you have invested in an asset and your organization says that we will be getting more or less same benefit every year. If you'll be getting same benefit more or less on every year, then definitely you should be depreciating by using straight line method. For example, if you have purchased a building, normally we can say that from that building you'll be getting more or less the same benefits. But if you have invested in a plant which is being used in the production, normally what happens when the plant is new, you will be getting more economic benefit and slowly and gradually those benefits they reduce. Then you should be going towards reducing balance method, which means that if there are same benefits, more or less, I'm not saying exactly the same benefits, but more or less same benefits each year, then depreciation method should be straight line. Depreciation method should be a straight line method. If we are getting more benefit in earlier years, more benefits in earlier years and later reduce benefits. If this is the case of the pattern of economic benefits, that earlier you will be having more benefits and later on the benefits will reduce, then you should go for reducing balance method. That is written down value. Another important concept which you have to have a really good understanding, that is, if the pattern of economic benefit changes, then you have to change the depreciation method. And let me tell you, change in depreciation method is treated as change in estimate, and change in estimate is always applied prospectively. That is from the date of change onwards. From the date of change onwards, you have to apply. Repeat. Change in depreciation method. Change in depreciation method is an example of change in estimates, and change in estimate is applied prospectively. Prospectively means from the change date onwards. So change in depreciation method is treated as change in estimates. And change in estimate is applicable prospectively. Prospectively means from the date of change onwards. Okay. So systematic allocation means the pattern of your depreciation method should match with the pattern of economic benefits. And depreciable cost means cost minus residual value. This is the cost which is being depreciated. Now, what is actually a useful life? Useful life means, for example, let's say you are the owner of a property, plant, and equipment. How many years you want to use that asset? Let's say asset is having an economic life of 50 years. If an asset is having an economic life of 50 years, it means you can use that asset for 50 years. But your organization has decided that we will use this asset only for 10 years. So exactly how many years your organization has estimated that you will be using this asset, that is treated as a useful life. So either you are the first owner of this asset or you are a second owner of this asset. Useful life understanding is same. That is how many years right now owner wants to use this asset. So for example, if your organization has decided to use this asset for 5 years, then 5 years is a useful life. And a very important point is useful life is an estimate, and change in estimate is applied prospectively. Residual value means estimated sale proceed minus cost to sell at the end of useful life of the asset. For example, if the asset is having a useful life of 8 years, then at what value this asset will be sold at the end of its useful life? Obviously, it is also an estimate, and we know that change in estimate is applied prospectively. According to IAS 16, organizations should annually review the depreciation method, useful life, and residual value. In case of any one of them changes, you have to apply the change prospectively. And other things, depreciation. Actually, when do we start depreciating the asset? When do we start depreciating the asset? The answer is when it is available for use. Repeat. When do we start depreciating the asset? The answer is when this asset is available for use. When property, plant, and equipment is available for use. A very important point is when it is available for use, you have to start depreciating the asset. Even it is idle, but if it is available for use, you have to start depreciating the asset. So once your asset is available for use, you will start depreciating the asset. Okay. Now, another concept. We know that in IAS 16, property, plant, and equipment, initially you have to carry the property, plant and equipment at cost. So initially, property, plant and equipment is carried at cost. So initially property, plant and equipment is carried at cost. Actually, subsequently, you will be having two options. Subsequently, IE 16 gives two options to the organization. Either you can follow IE 16 cost model, or you can go for IE 16 revaluation model. But a very important point is initially you have to carry out the property, plant and equipment at cost. Subsequently, you will be having two options. One is cost model, another is 16 revaluation model. Very important concept is if organization has decided to follow, for example, IE 16 cost model, then for the same class of assets, you have to follow the same model. If you have decided to go for revaluation model, then for the same class of asset, you have to follow the revaluation model. So same class of all property, plant and equipment will have the same model. Repeat, all class of same assets will have the same model. So it is up to the organization to either go for cost model or revaluation model. But a very important concept, let us discuss a little bit link between IE 16 and let's say ISB framework. Actually, ISB framework also gives you the two options. One is cost, another is let's say current value. And it is written in the framework. It is you can say it is the fiduciary duty of those preparer of financial statements. They are responsible for preparing the financial statement. They have to make sure that the financial statement must provide the relevant information and faithful representation of, let's say, asset and liabilities and income, expense, and equity. Basically, if I talk about framework, and framework is saying it is the fiduciary duty of preparer of the financial statement to provide the relevant information. Now, preparer of the financial statements, they need to decide which model is more relevant, either 16 or cost model or revaluation model. For example, let's say if you're having a plant which is used in the production, this plant is being used in the production and you're producing product XYZ, something like that. So normally, when we have plant and machinery which are used in the production, when we are having plant and machinery, they are being used in the production. Normally, such plant and machineries values, they do not change so much due to changes in the values in the market. Another thing is normally we do not have, obviously, in case of plant and machinery, we know that if we bought that plant and machinery for 10 years, we'll be using 10 years in the production. So if you are keeping such plant and machinery at cost, then it is normally it is acceptable and it is relevant also, because normally plant and machinery, they are not, their you can say their value does not fluctuate so much. But so it means for plant, if you're using cost model, it is logical. But when it comes to building, normally we know that when it comes to the property, normally, property, it keeps appreciating. Normally property value, you can say that it keeps increasing. And whenever there's ups or downs in the market, then obviously property value fluctuates a lot. It means that when it comes to the building property, obviously on which IE 16 is applicable, if entity has decided to opt revaluation model for the building, then we can say that that is more appropriate, that is more logical. So that is just a hint which framework has given us, but it is not necessary that you have to follow what the framework is saying. The main objective is framework is asking only one thing. Framework cannot emphasize either to go for cost model or revaluation model. It is up to the entity which model they believe is suitable for them. But the main emphasis of the conceptual framework is you need to make sure whatever accounting you are doing, obviously under IAS 16, you should provide a relevant information. That is your duty. If your entity thinks that cost model is relevant for plant and machinery, then obviously all the plant and machinery will be having cost model because they are of a same class. If on buildings you have decided to go for revaluation model, then all the buildings will have the same revaluation model because they are of a same class of assets. And IAS 16 says same class of assets will have the same accounting model. Another concept is changes between the from cost model to revaluation model or revaluation model to cost model is treated as change in accounting policy. Because whenever we say that IAS gives you a choice either to go for cost model or revaluation model, whenever the word choice comes, choose comes, then it is your accounting policy. Actually, accounting policy gives you the right to choose, the right to, opt. So changes between cost model to revaluation model or from revaluation model to cost model, there is change in accounting policy, and change in accounting policy is applied retrospectively. Excuse me. Change in accounting policy is applied retrospectively. That is from day one. So since from a very first day, you will apply the change in accounting policy. So change in accounting policy is applicable retrospectively. Okay, now another thing, assuming, let's say we are having a plant, cost is, let's say, 100 million. Useful life is, let's say, 10 years. We bought on this date. Okay. Let's say nothing is mentioned, then obviously we depreciate by using straight line method. So the plant is 100 million. Depreciation 100 divided by 10 is obviously 10. It is 90. Okay, organization has decided to go for revaluation model. We know that initially it has to be cost. Subsequently, it is up to you either go for cost model or revaluation model. Now look at this. There are two cases. Number one is on 31st December 2023, revalued amount is, let's say, 120. B, on 31st December 2023, revalued amount is 80. You can see that in part A, obviously there's a revaluation surplus. From 90, we have to come down to 120. So there's a rise of 30. So that 30 is your revaluation surplus. This 30 is your revaluation surplus. This 30 is your revaluation surplus. So in part A, if I just make the double entry for our understanding, debit and credit, simply the plant is debited by 30. Revaluation surplus, that which goes to OCI, revaluation surplus 30 credit. Now listen, when subsequently, if you are going to sell this asset, this revaluation will never be recycled to P&L. It means maximum at the time of disposal, you can close this revaluation to the retained earning. You cannot bring that 30 at the time of disposal to the profit and loss. So when your IAS says you cannot recycle this revaluation surplus at the time of disposal, You cannot recycle. You cannot recycle. You cannot recycle this revaluation. It means at the time of disposal, maximum you can close this 30 to the retained earning. You cannot bring this 30 to the profit or loss. This is part A. Now listen and listen carefully. Look at this part B. We are revaluing the asset first time. We are revaluing the asset first time instead of increase. The value is actually decreasing from 90. I have to go down to 80. So if it is the first time of revaluing the asset and instead of increase in the value, there's a decrease in the first time, in a very first time, then logically that 10 million is your, you can say that 10 is your impairment loss, and that goes to directly P&L, profit and loss. So what will be the entry in B? Look at this. Debit and credit. You can directly debit the profit and loss, or you can say that impairment loss 10. Impairment loss is 10. And simply this plant and machinery or plant is credited by 10. So repeat, if on a very first time when you are revaluing the asset, instead of increase in the value of property, plant and equipment, if there's a decrease, then that decrease is straightforward your impairment loss, and that is charged to income statement. Because you do not have any revaluation surplus already in the carrying amount of property, plant and equipment. So there are two possibilities when we are revaluing the asset first time. Either there will be a revaluation surplus, that is increase in the value of asset, then it is case one. And another possibility that first time you are revaluing the asset, then instead of increase, there's a decrease. If there's a decrease, then it is case B. So there are two possibilities which I've just shared with you. When you're first time revaluing the asset, so instead of increase in the value of asset, there's a possibility of decrease as well. If there's an increase, what to do? We have just discussed. If there's a decrease, what to do? And then we have another concept in IAS 16, that is componentization. Actually, in componentization, let me make it easy. Actually, what happens? We just talk about a complex asset. We talk about an asset which is the combination of multiple assets. Repeat. In componentization is the concept when we talk about an asset which is which is a combination of multiple assets. If, for example, if I talk about a car, so you cannot say that a car is just a simple asset. No, 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 no. If you just look at the car, so you can say that exterior body of the car will be having a different life, seats of the car will have a different lives, and engine of the car will have a different life. So that is why, according to the concept of componentization, each component of that, let's say, car should be depreciated separately. Why? Because you cannot depreciate entire car by using straight line method or reducing balance method. Reason? Because each component is having a different useful life. So this concept is applicable. This concept, you can say this when an asset is the combination of multiple components where each component where each where each component is having different useful life, then each component should be depreciated separately. Should be depreciated separately. Should be depreciated separately. Each component should be depreciated separately. Excuse me. For example, in case of cars, you can say engine should be depreciated separately, then exterior structure. Another example could be, let's talk about an aeroplane, aircraft. For example, we are talking about aircraft. Another example even could be car, etc. It could be ship. So basically, the concept of componentization is very simple. When we talk about an asset, which is a combination of multiple components where each component is having a different useful life, all you need is do one thing. Each component should be depreciated separately according to their own useful life. Yes, one thing can be done. What is that? If let's say if an organization has decided that, let's say let's talk about an aircraft. If an organization says we can break that aircraft into, let's say, 10 components, okay? And if organization says out of these 10 components, assuming 4 components they are having a same useful life, if they're having same useful life, then obviously you can depreciate all of them together. If they are having same useful life, then you can depreciate all of them together. But normally this is not the case. So what you have to do, you have to simply depreciate each component separately. You have to depreciate each component separately according to their own useful life. So dear student, these are the main concepts of, I would say, IAS 16, property plan and equipment. Now, what is my target in the next class? What we are going to do? As I mentioned earlier, since it is the first class of March 2024, that is why it will not be long, but slowly and gradually we will increase the time period of the class. Inshallah, in the coming class, we will be discussing, inshallah, very quickly IAS 36, IAS 20, and I'll try to discuss IAS 23 also. Target for the coming class. Target for the coming class. And let me tell you, class 2, make it lecture 2. Lecture 2 target. Now let me tell you one more thing. Another thing, please, everyone has to listen this, what I'm going to tell you right now. Listen and listen carefully. Please, you have to follow your planner, which I'm sure admin has definitely, admin should have shared with you. If you don't have a study planner, do ask the admin in the WhatsApp group that please admin share the word planner with you. They will share the planner as well. But please, you have to follow the planner. You're not supposed to adjust your speed with the live revision classes. Never do that. Never. See, live revision classes are there to give you an added support. They're not your entire course. Entire course is very different. So please, your speed should be according to the study planner. Your speed should not be according to the live revision classes. I hope I've cleared this thing. So I really want every one of you, please follow the planner. And if you have any questions, you can, any one of you, if you have any questions, you can ask, please. Waiting for the question. If you don't have any questions, it's okay. And this recording will be available, inshallah. But I really appreciate that. Please try to take live revision classes by coming online. So it motivates the tutor as well. So I hope that you people have liked this class. So just hope. So inshallah, I'm going to share this document as well. Don't worry at all. So thank you very much for taking time and attending the live revision class. Thank you very much and Have a nice life. Thanks a lot.